leave your money in the bank when you can send it on an errand? In this world, in this economy that there's inflation everywhere, you don't have to leave your money in the bank. If you are still leaving your money in the bank in 2025, oh my god, I don't know what you are doing.
Hi, my name is Isef. I'm a content creator, an entrepreneur, a fashion business owner, a marketing director. I'm a coach, I'm a business coach, and I teach people how to make money and invest money online. If this is what you're looking for, make sure you give this video a thumbs up, a like, and subscribe to see more videos like this. So let's get started.
Because there's an expected inflation rate coming for your money every year if you are leaving your money in the bank. And do you know that the purchasing power is always dropping? What 1 million naira can do last year is not what 1 million naira can do right now. So while inflation is coming for your money, it is just wise for you to put your money where it will keep increasing. Now, some people are actually scared of investing. They're actually scared of removing their money from their bank. They feel safe there. But this particular thing I want to talk about today is for you if your risk appetite, your investment risk appetite is very, very, very low. So instead of leaving your money in the bank that they don't even pay you they don't pay you for saving, they don't give you any percentage on your savings. Why not do this instead? Today we are going to be talking about mutual funds. Mutual funds are for people that have low risk appetite, and I'm going to start by defining what mutual fund is for people that don't know what mutual fund is. So it says here that mutual funds are investment vehicles that pool money from many investors to invest in a diversified portfolio of stocks, bonds, or other securities. So what that means is that it actually uses your money to buy fractional shares, fractional bonds, fractional treasury papers. So instead of just putting your money in one stock like Netflix, or putting your money in real estate, like putting all your money in one basket, that be all your eggs in one basket, it will actually diversify it for you. And they are managed by experts, they are managed by professionals, right? So we have many types of mutual funds, we have many types of them. I'm going to be mentioning just a few, just to give you an idea of what mutual fund is. There are different type of mutual funds. We have equity funds. This one, we invest your money in stocks and it aims at long term. The second one is bond funds. It invests in bonds and focus on generating income with lower risk. We have the money market mutual funds. We have balance funds. Blah 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 blah. I don't want this to be complicated for you, and I want to break it down. And in this video, also going to be telling you the apps that you can use to invest in mutual funds. So stay to the end, right? So we have many funds right now. The funds, okay. Let me start by saying that you can actually use fintech apps to invest in mutual funds, or you can go to your local bank. You say that your bank that you're leaving your money at, just go to them. Go to, say you want to see the manager, and ask how much, what do you have mutual funds. First of all, do you have mutual funds in this bank, and what is the percentage, what is the yearly returns in percentage for it? So you can do that. I think Stanbic Bank has mutual funds that you can buy. I think it's around 22% per year. So you can do your finance. I don't know much about that. But personally, I use fintech apps, and I'm going to be talking about Optimus by Afri Invest today. So on that app, we have the Naira mutual funds and we have the dollar mutual funds. For the Naira mutual funds, we have the AEF. That's Afri Invest Equity Fund. For there's another one, but let me talk about them one by one so that you can know the best one to buy or the best one to invest in. So for the AEF, which is the Afrinvest Equity Fund, for every 1k for every 100k you invest per year, you are getting 5.47% back. That means you are getting 5,470 naira back on your investment if you invest 100k per year. So for every 1 million naira, you are getting 54,700 naira back. Can you see that it's better than leaving your money in the bank where they don't even give you any percentage on your savings? There's another one that has the yearly returns of 19.70%. That's AfriVest Pluto's Fund APF. And for every 100 million you invest, that means you are getting 190k back, 190,170 naira back to be specific. Then the third one under the naira, we're still talking about naira mutual funds, is the Nigeria International Debt Fund. It has the yearly return of 0.03% back. That is very low. Okay, so let me tell you the prices of each of these. It typically has the same buy rate and the sell rate. That means if you are buying the same with how will I explain now? If you bought it for 300 naira, you are still selling at 300 naira. It is just that it increases by percentage, and it is very stable. Like I said, if you invest 100k, it is not going to go below 100k. Yes, if you invest 100k, you are still going to meet your 100k back after 1 year. So it is not like stocks or other investments that goes up and down. Sure, you get. So if your risk appetite is very very low, this is the perfect one to put your money. Just don't leave your money in the bank. That's just the point. So if you want to buy AEF, you are going to be buying it for 419 naira 25 kobo on the app. And if you want to sell, it's the same price. If you want to buy APF, you are buying at 100 naira per share. If you want to buy NIDF, you are buying at 354 naira 67 kobo. So yeah, another thing I want to mention is that some of these mutual funds actually pay dividends. Dividends is just when they share the profits they make per year, and can be twice yearly. Some are by annually, some are quarterly. For AEF, they paid last year, I think like last year April, they paid around that time. So when they pay, that means that's extra money for you, right? When they make profit, when they make a lot of profit, they share part of their profits with their stakeholders, which is you. So I think that is very sweet, right? So for dollar mutual funds, there's only one under AfriVest app, and it is the AfriVest Dollar Fund, which is currently returning minus 0.04% per year. That is minus, and you are buying for $112.02. So yeah, there you have it. If the app I'm currently using to buy mutual funds is the Optimus by AfriInvest. I'm going to put it somewhere. Yeah. So it is the Optimus by AfriInvest. You should try it, even if you want to just start with 100,000, 50. Let me tell you, the best part is that you don't actually have to start with 100,000 naira. You can start with 5,000 naira and see how it goes in like 1 or 2 months. If your money reduce, it is not going to reduce. So you can start with as low as 5,000 naira. Isn't that sweet? The more you buy, the more you gain. So if your risk appetite is very low, mutual fund is the way to go. We've come to the end of this video, and if you found this video helpful, make sure you like and subscribe to see more videos like this. I'm going to link a playlist here that involves you retiring before 35. If you are willing or looking to retire before 35, there's a video in that playlist. I think you should watch it, and I'll see you in my next video. Bye.